We begin in the quiet moments. The market is a sea of flickering numbers, a confusing stream of red and green that most people call noise. They see chaos. They see gambling. They see the random walk of a market without a soul or a memory. But if you listen closely, if you tune out the daily screams of headlines and the fleeting emotions of the crowd, you can hear something else. You can hear an echo, a rhythm, a pattern that repeats, not in every detail, but in its fundamental shape. This is not noise. It is the ghost of human behavior, imprinted onto price over and over again. This is a story about that pattern, a guide to seeing the shape that hides in plain sight. The journey to understanding begins not with complex indicators or secret algorithms, but with simple observation. We must look at the past, not as a guarantee of the future, but as a map of the human heart. Markets are not just charts. They are collective stories of hope, greed, fear, and ultimately innovation. Each major cycle has followed a script, driven by the same emotional and technological forces, a four-act play that unfolds over years. Most only watch the third act, the climax. They miss the quiet setup in Act 1 and the crucial rebuilding in Act 4. This pattern is not magic. It is the dance between technology, narrative, and human psychology. Our story begins in 2013. The world barely knew the word Bitcoin. An obscure experiment, a curiosity for cypherpunks, libertarians, and computer scientists. The price moved in obscurity, a long, quiet phase of accumulation, belief without a crowd, the slow gathering of fuel before the spark. Then, the market ignited. The narrative shifted from niche paper to digital gold. $100 fell, and headlines followed. Market ignites. Vertical ascent. Tutorials. Sign-ups. Disbelief turning to frenzy. Every rocket carries seeds of descent. The parabolic arc became unsustainable. Break and purge. Price collapsed over 80%. Tourists exited. The dream wasn't dead, merely dormant. Rebuild and seed. Better code, better wallets, new companies, stronger infrastructure. 4 years later, a larger performance. Longer accumulation, maturing tech, blockchain enters boardrooms. A new idea, the initial coin offering, brewed atop a new platform called Ethereum. Smart money quietly collected assets. Builders kept building, waiting for narrative to catch fire. Then it ignited, dwarfing what came before. Overnight millionaires, altcoin mania. The peak felt eternal, until it wasn't. The purge was brutal. Regulation and skepticism surged. The crash cleared weak projects, leaving a hardened core and a vastly expanded base, DeFi's seeds. After 2018, a desolate winter, sideways for years, quiet accumulation again. This time, institutions, balance sheets, macro legends, an inflation hedge amid unprecedented printing. DeFi emerged from the bear, NFTs hit culture, a global repricing event followed. Step back, 2013, 2017, 2020 to 21. At first, they differ. Trace the emotional journey. The same shape emerges. We can name it the accumulation ignition cycle, quiet accumulation, market ignites, break and purge, rebuild and seed, a blueprint driven by innovation, narrative, and timeless human emotion. Quiet accumulation is longest and least exciting, born in the ashes, grinding higher amid apathy and despair. During this time, original believers, builders, and sophisticated investors accumulate patiently. Market ignites. When a new narrative or breakthrough captures imagination, media accelerates and price goes vertical with FOMO. The break and purge, feedback loops reverse. Euphoria to anxiety, denial to fear, into capitulation. It washes out leverage and unsustainable projects, separating signal from noise. Beyond the 4 steps, another force moves slower than headlines. Time encoded in Bitcoin's protocol. The halving, approximately every 4 years, New supply is cut in half. Mathematical certainty. An inexorable, predictable supply shock, the unseen hand that winds the market clock. A recurring heartbeat. Reduce flow, demand stable or rising. Pressure builds. Accumulation often starts 1 to 2 years before. Ignition arrives 12 to 18 months after. Programmed scarcity is revolutionary, transparent, predictable, immutable. Not miners, not central bankers. Mathematics. The drumbeat every 4 years. Cadence for the cycle. We have walked through the past. We have named the pattern. We have seen the hidden hand of time. Now we turn to the present. Today, on October 15th, 2025, where do we stand? The headlines are tired. The public is distracted. Boredom and skepticism linger. The loudest voices say it's over. But look closer. Builders are shipping. Second layers like lightning accelerate. Spot Bitcoin ETFs now bridge regulated demand. Institutions are building docks, not dipping toes. Narrative shifts from frenzy to integration and financialization. The halving of 2024 has constricted supply. Infrastructure for demand is in place. The narrative is coalescing. The ignition will not whisper or trickle. It will roar as institutional floodgates open. Fear will evaporate. The crowd will return with a vengeance. The climb will shock even optimists. One claim: the next great crypto bull market is already in motion, and it will define 2025.